Greetings to Madam and Sir. Our group will be presenting about the performance of Hong Leong Bank. My name is Rachel D. N. Roslan, matrix number 2024988825. Now, I would like to introduce you to Hong Leong Bank, one of the leading banking groups in Malaysia and the Asian region. In 1905, in the heart of Kuala Lumpur, where they started as the Kuang Li Mortgage and Remittance Company. Over the decades, they have grown through strategic acquisitions and mergers, shaping them into the institutions they are today. A pivotal moment in their history came in 1994 when they merged with Tan Hung Seng Bank, forming Hong Leong Bank Berhad. This merger marked the beginning of a new era for them. In 2001, Hong Leong Bank Berhad took another significant step by going public on the Kuala Lumpur Stock Exchange, now known as Bursa Malaysia. The current chairman is Yang Berbahagia Tan Sri Kwek Leng Chan, which was appointed on 3 January 1994. Now, Hong Leong Bank is proud to be part of the Hong Leong Group, a major Malaysian conglomerate with diverse economic interests. Their reach extends across Malaysia through a network of over 300 branches offering a comprehensive range of financial services, from personal and businesses banking to Islamic banking, wealth management, and trade finance.
Next, for the overview of Hong Leong Bank products and services, Hong Leong Bank Malaysia is a major player in the Malaysian financial sector, providing a diverse range of goods and services to fulfill its clients' needs. In terms of personal banking, Hong Leong Bank offers savings and current account with competitive interest rate and easy access to fund via ATMs and online banking services. Fixed deposit account have flexible tenure options and give greater interest rate for more disciplined saving. Personal loans and mortgage meet a variety of financial demands, including flexibility for home purchases, renovation, and emergencies, but they come with added weight of substantial interest payments over time. Hong Leong Bank's credit cards increase spending power and provide rewards, cashback, and travel privilege, but they also have high interest rate which can lead to debt if not used carefully. In the business banking sector, Hong Leong Bank assists businesses with business accounts that provide effective cash management and streamlines transactions with higher cost than personal account. Despite high interest rate and strict creditworthiness requirements, the bank's commercial loans and financing choices, such as term loans and trade finance, are critical for business expansion and operational needs. Hong Leong Bank's extensive trade finance services enhance international trade by minimizing risk and ensuring secure transactions, but they can increase transaction costs and demand sophisticated documentation. Hong Leong Bank also excels at wealth management, providing a variety of investment products, insurance services, and private banking suited to high net worth customers. Unit trusts and bonds are examples of investment options that give diversity and the possibility for higher returns, albeit with variable levels of risk. The bank's insurance service provides financial security and peace of mind by covering life, health, and general hazard, although premiums can be costly and some policies may have exclusions. Private banking services provide personalized financial solutions and exclusive benefits, but they require significant investable assets and come with high service fees. Overall, Hong Leong Bank's diverse service provide numerous advantages, but they also have potential negatives such as fees, interest charge, and investment risk, emphasizing the significance of educated decision-making for consumers and stakeholders.
Digital technology has profoundly impacted Hong Leong Bank across several key areas. Firstly, it has significantly improved operating efficiency by leveraging automation and AI, reducing human errors and speeding up transaction processing times. This has streamlined internal operations and enhanced service delivery. Secondly, the bank has transformed client experience through mobile banking apps and internet services, providing seamless access to banking services anytime, anywhere. This has boosted customer satisfaction and loyalty. Financially, digital technology has led to substantial cost savings by reducing the reliance on physical branches, thereby cutting overhead expenses. Moreover, The adoption of big data analytics has enabled Hong Leong Bank to gain deep insights into consumer behaviors, facilitating personalized services and more effective risk management. In terms of cybersecurity, the bank has bolstered its defenses against cyber threats, ensuring robust protection of sensitive client data and building trust among customers. From a regulatory standpoint, digital tools have optimized compliance efforts, ensuring adherence to regulatory requirements with greater efficiency and accuracy. Last but not least, these advancements have not just transformed operations and finances but have also strategically positioned Hong Leong Bank to proactively tackle future challenges and capitalize on emerging opportunities in the digital era. In conclusion, the integration of digital technology has been pivotal in shaping Hong Leong Bank's operation, enhancing customer experiences, driving cost efficiency, and preparing the bank for a dynamic future.
Now, we will move on to the performance evaluation, start with the profitability ratio, where it helps to assess Hong Leong Bank's ability to generate earnings relative to its expenses and other relevant costs incurred. These ratios are crucial for evaluating the bank's financial performance and operational efficiency. There are four types of profitability ratio, which is return on assets, return on equity, spread, and net interest margin. The return of assets of Hong Leong Bank Berhad had decreased from 2022 until 2023. There is a decrease of 0.15% in 2023 compared to 2022, which indicates that the bank has less efficiency in utilizing its assets to produce profits in 2023. For the return on equity in 2023 is 1.07% lower than in 2022. This indicates that the efficiency of Hong Leong Bank Berhad in generating profit for each ringgit of shareholders' equity has decreased. Next, the spread value in 2022 is positive, which is 318,770 ringgit, while the spread value in 2023 is negative, which is 1,650,541 ringgit. The positive value means that the bank is gaining profit, while the negative value indicates the losses incurred by the bank. The net interest margin of Hong Leong Bank Berhad also decreased from 1.72% in 2022 to 1.57% in 2023. The ratio for the both years are positive, which indicates gain of profits and there is a proper handling of assets and liabilities.
Assalamualaikum and greetings to Doctor. I'm Nur Fariha Amin with matrix number 2024766969 and I will be presenting the performance evaluation of Hong Leong Bank for the year of 2022 and 2023. The performance of Hong Leong Bank can be evaluated through several ratios, one of it being the liquidity ratio. Liquidity ratio is often utilized to determine the capability of Hong Leong Bank in order to make full use of its asset whenever the liquidity increases. It is preferred for the bank to have a peak level of the ratio, as this would guarantee that the bank is able to pay their creditors. Two types of liquidity ratio are loans to total asset and liquid asset to total assets. As for the loans to total asset ratio, this ratio decreased from 2022 to 2023. It went from 64.6% in 2022 and 63.4% in 2023, both ratio exceeding 50%, indicating that the liquidity is on the low level even though it is decreasing. This indicates that more loans are provided to their customer. As for the liquid assets to total assets, this ratio will compute and analyze Hong Leong Bank's liquidity and their capability to make up for the short-term liabilities if needed. This ratio shows an increase from 2.75% in 2022 and 2.96% in 2023. This indicates that the bank are able to cover their short-term liability. Next, we have asset quality ratio. Asset quality ratio is often used to compute and measure how Hong Leong Bank manage their asset and lessens the risk of unwanted losses. There are three types of asset liquidity ratios, which are non-performing loan, loan to deposit, and deposit to shareholder fund. First one is non-performing loan. This ratio is widely used to measure the quantity of Hong Leong Bank's credit risk and the value of outstanding loans. This ratio have increased from 0.011% to 0.018% from 2022 to 2023. This indicates that there is an increase in the bank's credit risk. Although there is an increase, the bank is still in great efficiency as the NPLs are below 1%. The second one is loan to deposit ratio. This ratio is often used to determine a bank's liquidity by differentiating its total loan to its total deposits. This ratio shows an increase by 11.84% from 2022 to 2023. This is worrying as higher ratio indicates lower liquidity to cover any risk that may occur in foreseeable future. The third one is the deposit to shareholder fund. This ratio is computed by comparing the customer deposits to the shareholders fund. This ratio shows decrease from 6.92 times to 6.12 times. This shows great improvement that the bank as lower ratio are much favorable. Moreover, we have the capital adequacy ratio. This ratio is widely used to measure the capability of a bank to meet its responsibility and also to determine the total of capital that Hong Leong Bank has available and reserved to bear certain losses or unexpected risks. The first ratio under this ratio is risk-weighted capital. This ratio is used to indicate to the bank on the amount of capital they need to have linking to their risk profile of borrowing activity. They are decreased in the percentage of the ratio by 0.71%. This matter need to be looked into as lower percentage means lower sufficiency of the capital to cover possible risks. The next ratio is core capital. This ratio is the most important part of a capital ratio as it is the foundation and the core of the ratio that are responsible for measuring financial strength. Even though they are decreased in the ratio by 0.37%, it's still a great ratio as it is above 6%, which is a good ratio for core capital. Though it is barely sufficient for the bank, getting too comfortable with the result is not recommended. Next, we have the management soundness ratio. This ratio is used to measure the level of performance of Hong Leong Bank's operation. Administrative expenses to total expenditure is the only type of ratio under this management soundness ratio. This ratio is calculated by comparing the total of administrative expenses spent by the bank to its total expenditure. The ratio shows decrease in expenses from 33.29% in 2022 to 17.47% in 2023. This indicates good management from the bank as they are able to control the administrative expenses. Next, I will be presenting the 2-year CAMEL for 2022 showing the overall performance evaluation of Hong Leong Bank. In 2022, we have capital adequacy ratio of 14.37%, which is very strong. Next, we have the asset quality, which are the NPLs, which are 0.011%, which indicates that it is very strong as it is lower than 1%. As for the management efficiency ratio, we have 12.92%. This indicates a good result for the ratio as there are more room for improvement. Next, we have the earnings capability, which is the return on asset. It shows a result of 1.12%, which are also considered good because there are more room for improvement as well. Next is the liquidity, which are the liquidity asset, showing a result of 2.75%, which is poor because this indicates that only 2.75% of the asset are liquid. As a result, the average composite rate for the 2-year CAMEL in 2022 is 2. Next, moving on to 2023 2-year CAMEL. First, we have the capital adequacy ratio of 13.66%, which is very strong. Next, we have the asset quality, which are the NPLs, amounting to 0.018%, which is very strong as it is lower than 1%. Moreover, we have the management efficiency ratio, which are 19.32%. These show a good result, but there are more room for improvement. And then we have the earnings capability of the bank, which are return on asset amounting to 0.97%, which is very poor. This is because it is even lower than 1%. As for the liquidity, which are the liquidity asset, we have 2.96%, which is very poor as well. As for the average composite rate for 2023 Camel, we have amounted to 2.4.
Hong Leong Bank Berhad shows both strengths and challenges in its recent financial performance. The bank's long history provides stability, but there are areas need improving. While capital adequacy and asset quality remain strong, profitability has slightly declined. Liquidity management needs attention to reduce short-term financial risk. The bank's focus on digital technology has improved efficiencies and customer experience, giving it an edge in the market. The Camel analysis indicates good overall performance but highlights the need to improve earnings and liquidity. Moving forward, Hong Leong Bank should focus on increasing profit and strengthening its liquidity positions. Leveraging its digital capabilities could help address these challenges. In summary, Hong Leong Bank balanced traditional banking with digital innovations. By addressing weak areas and building on its strengths, the bank is well positioned for future success in ASEAN banking sector. Its ability to adapt to the market changes, use digital opportunities, and maintain strong risk management will be crucial for continued growth and competitiveness.